Welcome back to CapexForexTrading.com. In this video we're going to discuss the 2% rule, which is a rule used as part of money management by many successful traders around the world. Now, this well-known rule basically states that even if trading conditions are 100% correct or perfect, don't risk too much on a single trade. Now, you will usually see, say, poker players, when they have a really good hand, go all in because they're certain that their hand is the strongest. That rule does not apply to forex trading because there are always factors outside of our control that can turn prices against us and basically take out our stop loss. So the point of the 2% rule is that even if the conditions are 100% perfect, always ensure that you know what the worst case scenario is. So the 2% rule basically applies to the risk part of your trade, i.e. the amount of pips that you're using for your stop loss. So if you're using 10 pips for your stop loss, you must ensure that the amount of money you assign to those 10 pips is no more than 2% of your total investment per day. So you're basically setting yourself a 2% loss per day, and once you hit that loss, if you got taken out by number of factors, then that's where you stop. So let's say that you've got $1,000 in your trading account. Now 2% of 1,000 is $50. So $50 is the maximum that you're allowing yourself to lose per day. So if you're trading or using a 10 pip stop loss, the max that you should invest is $5 per pip. And the reason for that is because $5 times 10 pips, which is your stop loss, equals $50, which is your maximum loss per day, which of course equates to 2% of your total investment. So let's have a look at that example on the chart. So the area that we're looking at is here. So let's say that we wanted to enter here and our target was here. So what we have is just a line to define that. So we've got our entry and our target. So entry is here, our target is here, which is equivalent to this previous high. Now, if we're playing or using a 10p stop loss, let's say that for the sake of the argument, the gap between the top line and the bottom line is 10 pips. We must ensure that those 10 pips are no more than $50, which of course, like we said, was equivalent to 2% of our total investment. If we get stopped out, that's our limit for the day. If we continue and reach that target like we did here, then we'll have a new 2% figure because our total investment will be our winnings plus the 1,000 that we already had. Now, to spread out the risk, you can apply the 2% rule to 2 or 3 trades rather than just one. So this way you are guaranteed to have 3 goes at generating profit, but your investment will be lower as that 2% risk has to be divided into 3 portions. So after you have your results from all 3 trades, you can apply the 2% rule to the new total investment amount that you have. And lastly, remember to include any other charges in your calculations, such as the spread or the overnight swap rate if you're using higher time frames, just to ensure that your calculation is as specific as possible. Okay, so that concludes this lesson. If you want to subscribe to our channel, that would be great. Otherwise, you can follow us on Facebook, Twitter, LinkedIn, or Google+, and we shall see you for the next lesson. Thanks.